Hey everybody, morning. How's it going? Just in case anybody didn't see, I released a new video packed with information about the 5 executive orders that I think make the biggest difference in 2026. Maybe go check that out after the video. So, good morning and welcome back to the show. You know, for years we've been told this grand story about artificial intelligence. I mean, ChatGPT released in 2022, so it's been 3 years in the making, kind of, as far as the current iteration goes. The benevolent, all knowing force that might cure disease, solve climate change, probably even figure out why my teenagers refuse to clean their rooms. I guess they're all not teenagers anymore, or yeah, I don't know. You know, it's the future right now. It's a sleek, shiny Jetsons style future. We've all been doing some digging, and it turns out the future looks less like the Jetsons and more like a grainy black and white photo from 1905. Instead of flying cars, well, we've got a potential electricity crisis. That's right. The same thing that our great grandparents dealt with. Turns out that AI, the digital overlord savior, is a power hungry monster. It's about to eat our lunch, maybe. And I'm not really kidding here. A single top of the line NVIDIA GPU, little engine that powers this AI magic, now guzzles as much electricity as an entire American household. Just one. Now picture this: a single data center, one of those giant windowless buildings, like a warehouse, a Sam's Club on crack, Costco, even. Tons of those stacked together. I mean, you can put like 1,000,000 of these GPUs in one of those things. Do the math. That's like 1,000,000 households. I mean, it's kind of depressing, right? Especially if you do that before your cup of coffee or morning monster. But what we're witnessing here is not just an innovation boom, it's an electricity grab of epic proportions. The US is going to need to add the equivalent of 10 to 20 brand new nuclear plants in the next few years just to keep up with ChatGPT. It's kind of crazy. I mean, the bubble isn't necessarily in the hyperscalers. The bubble is in the transformer substations that are about to pop. It's kind of a reverse bubble, right? It popped from the demand. Too much demand. And who's at the front line of all this power? The new robber barons of the digital age? Well, the hyperscalers. We've got Google, Meta, Microsoft, Amazon. And while we're all debating the ethics of what gets made with AI or how things get done, they're quietly buying up all the land next to the major power lines. They're striking private deals with utility companies, building their own power plants in some cases, and even shopping for their own personal nuclear reactors. It's the 1900s all over again, except instead of Rockefeller controlling the oil, you've got tech giants grabbing up the electrical infrastructure. AI is the new gold. If it's the new gold and it's the new gold mine, well, electricity might be part of the gold mine. And these guys, they've already bought all the land, the shovels, the mining rights, and the rest of us, well, we get to pay the bill. But here's where potentially the opportunity lies, or maybe takes a turn for the more interesting. When there's a gold rush, you don't just bet on the guy with the gold pan. You sell the picks and shovels, and right now the picks and shovels of the AI revolution are all about power. Yeah, I've been talking about this for a few days. So where's the opportunity? Well, you've got these new power barons. These are the big established utility companies and the resurgent nuclear industry that's trying to kickstart itself again. I mean, we've got Constellation Energy, CEG, the largest nuclear operator in the country. They just signed a 20-year deal with Meta to power AI data centers. That's a long-term guaranteed revenue stream for CEG. And then you have the rise of smaller SMRs, small modular reactors. These are like the craft breweries of the nuclear world. They're smaller, they're faster, hopefully easier to build, and perfect for powering AI data centers. We can deploy them all over the place. Keep an eye on companies like NuScale Power, SMR, ticker, which, you know, so far it has the first and only NRC certified design, Nuclear Regulatory Commission. And then we have Centrus Energy, LEU, Lima Echo Uniform, which has a near monopoly on the special fuel that these reactors need right now. It's a classic picks and shovels kind of play for energy. And second, you've got Bridge Fuel Bonanza. Nuclear is great, but it's going to take a little bit of time to get this going. The immediate solution? Natural gas, if you've heard that commercial. It's the only thing that can be scaled up fast enough to meet the insane demand in the short term. If you look at pipeline companies, I talked about this, the ones that are literally building the arteries for this whole operation. A company like Williams Companies, WMB, is evolving from just a pipeline operator to a full-blown power provider for data centers. How about Southern Company, SO, a massive utility that's already partnering with Microsoft. And don't forget power producers themselves like EQT Corporation, ticker EQT, the largest natural gas producer in the United States right now. And you have the can't get cool crew, all these GPUs, all this power. Well, when you run them at max bore, it generates a lot of heat. And when you put it all inside a building, it gets really hot. Data centers are basically giant, expensive ovens. And computer equipment doesn't like to be hot. Keeping them cool, getting the heat out of the building is starting to be a multi-billion-dollar problem. And that's where companies like Vertiv, VRT are stepping in. They're the plumbers, they're the electricians of the data center world, providing critical cooling power and infrastructure. The stock is already up 190% in 2025. And the party potentially just getting started if we're going to build this stuff on a more massive scale. So, the AI revolution, it's here, but it's not going to be all sunshine and self-driving cars. It's going to be bare-knuckle brawl for electricity. And we might bear the brunt of it. So you got to prepare, make some money on this thing, help offset those increasing costs. The companies that provide power, build the infrastructure, keep the whole system from melting down, they're the ones that are probably going to come out on top, at least in the short term. Our story isn't about AI taking your job. It's about AI taking your electricity. And for smart investors, potentially a happy ending. So let's talk about how we actually make some money today. We had a big up week last week. It was pretty spicy. It was pretty good. Hopefully you didn't just put your head in the sand and take the week off. It was a pretty fair week. And all trading involves a substantial risk of loss. Past performance is not necessarily indicative of future results. This presentation is intended to be informational, educational, fun, entertaining, not a recommendation to be buying or selling any financial instrument. If you desire personal financial advice, well, there's people for that. And make sure you trust everybody. So last week we had a pretty good week. And then on Friday on Market Masters, I was like, Jack, after having a good Thanksgiving week, we pretty much climbed all week. We're probably going to take a step back on Monday. And, well, guess what? As we come in, the list is pretty red. Pretty red. We're seeing a little bit of a step back. But when you actually look at the index here, it's not huge. We did get up above this confirmation. Couldn't make it above this one. And, well, be careful. This right here could develop into this down here. But I do see a little bit more upside. Now, I drew this pullback right in there. That might be the one we're doing. So, could come back right in there. We'll see. I would like to stay above this level right here, that high from back there on November 20th. I'd like to see us stay above that. That was a big step back for a few people. We did a big, what's crazy, look at these candles right here. See this big fat candle right there? Look at this bigger fat candle right there. Kind of got a little bit of volatility in the markets here. A little bit of uneasiness. To get another one of those over here. If we do, that kind of completes a crazy looking head and shoulders. Now, that little guy sticking out, it's kind of like a wart on the wart on the side of the head. It's just something to keep in mind, though. As long as we stay under the top of the head, this kind of head and shoulders thing potentially sitting here and could play out. And if we did, typically head to the neckline, off of the break is where we would go. That would be all the way back down around 6,000. It's quite nearly 1,000 points down from where we were right up here. Holy moly. Maybe just 800. Close enough, right? That's a big step back. Now, I'm just warning the potential. Not saying we have to do it. Just saying it's possible. It would be below the daily roadmap line, but not quite to the 3-day. Now, we could step down to the 3-day. Just doesn't seem very likely at the moment. That breakout level back down here. Coming back to retest the breakout after this move we've made kind of makes sense a little bit. We did this big pullback right back here in April. We made this big ramp up. Retesting the breakout is something we commonly do across many stocks. So just be careful. We could, in fact, come back and retest the breakout. And if we did, look at that. That almost perfectly retest the breakout if that head and shoulders plays out. Just keep it in mind as a possible potential thing that might happen in the market. I can't guarantee it does. I can't guarantee it doesn't. You never know. Never know. Stay frosty, my friends. And look at the ES. You know, I kind of thought we would find a bottom, then pull on up to all-time highs. But we haven't really taken a step back. We had 1, 2, 3, 4, 5 green days in a row off of that low. We probably need a little bit of step back. So be careful. It's probably what we got cooking. Now, in Q, barely got above that high from the 20th. Friday, we just kind of cracked above, and then today we're retesting it. So this may be the tell. This one may be the one to watch more than the S&P. We do have the FOMC meeting coming up on the 10th. We could rally into that. If we got all the way up here before the 10th, probably setting ourselves up for a bigger pullback. Russell, I like it. Now, that's a nice roadmap bounce. That activated, that candle right there activated the entry for the target right up here with a 75% likelihood. Now, that said, it doesn't mean we won't pull back. We could pull back all the way back down here before we come back up. It is possible. Now, that's a high. That's a high. This is a downtrend of those highs. Many times, we will come back, retest that kind of breakout, and then launch off of that retest. It's a very common pattern we see over and over. If it takes a couple days, could put us right down near 50% retrace. Then that kind of activates a pattern that I like to call a measured bounce, which also supports the target. Right there. So that may be the path. Keep it in mind. Be careful. If you jumped on my IWM spread, it may pull back for a couple days, hunt for some support, and then go launching off. Oil still kind of being oil. This is a bearish pattern. That head and shoulders didn't really play out so far. Now the shoulder is like way disproportionate. Doesn't make any sense. So we've got this cooking. Lower highs all the way across the board. Locally, downtrend of highs. Downtrend of lows. It's kind of a downtrending channel, really. This looks like it wants to jump down. Sometime we may just need a trigger, like what's happening December 10? Is that the trigger? We just need some sort of trigger to drop this thing out. Low 50s, make a new low. Missiles might fly. Target's been down here for years. Got a nice setup. Be a horrible opportunity wasted to not just flush this out right now. Gold coming up into that resistance. Didn't expect it myself, but you know, hey. That was the A, here was the B, and the potential C right back up near the highs. And then watch out. That sets up a bigger downside potential. Suck everybody in. Bitcoin. I didn't really expect it to take a big jump down last night, but it's exactly what we did. I thought we would retrace from back over here. Instead, we went on up here and then did the 618 retrace. So we've got the low, we've got the high, we've got the 618 retrace. As long as we can hold on to this, we can still go bullish. Now, what do we got to see? What are the things and where do we expect it to potentially go? So the target's still pretty much the same. First resistance, we got to get back up through 89.8. This 618 level right there, which is just taking the candle back, basically. Got to get through that. Second, of course, got to get through the prior high. So these are the levels. Got to break back above that. Got to get above that. And then we could go cruising. Got to get through this little confluence here at 98K. If we can go all the way up here, 107K. That would tilt the odds bullish that we're going to go on higher after a bit of consolidation here. Now, this would become a very important level. If we got up here, we do not want to see the price come back below this 92,000, 93,000 area before we go on to make a new all-time high. Very simple right now. If we don't hold this, if we break on down below 83 right now, that's the important level. 83, that's a big warning. Then below 80 is kind of a confirmation that crypto winter is probably here. What's crypto winter? It's where we're going to correct crypto for the next 10 months, likely, and probably take it back down in the $30,000 to $40,000 area. So far, no confirmations here. We came up right to that limit, but we didn't do the retrace first, so it didn't really matter. We came up higher into the retrace. So that low right there from November 21st to this high right here from November 28th. We have retraced the 618. I thought we would do it from over here. Well, we came up here. Now we want to see that hold on and go higher. This is Ethereum, Ether, that high, this low. If we can get above, we're going to say above the roadmap line at this point, revise it slightly. But if we break down below that low, again, kind of confirming crypto winter. So these are important levels. These are important levels here. This level up here, this level here, and this level here. We're going to do the bullish thing. We need to be up here and up here. If we get below this, right there, that low, back about 2630. This, I'm afraid, is what we are confirming right there. Crypto winter. NKD taking a little step back. Normal. That's why I'm not too worried about everything right now. Global liquidity indicator climbing, retracing, holding the 618, breaking back above, getting above this 618 from that pullback. Confirms that we're probably going to go on higher. That likely will take the US markets, ES, NQ, Russell, and other risk assets like Bitcoin and Ethereum higher. Dollar, well, breaking down. Is that a head and shoulders? I don't know. It did make a slightly higher shoulder here. If we break down, we can possibly come down here. And if we get below 98.5, I think we're probably going to go lower low than we did in September on the dollar. Weak dollar is still intact, at least for today. Apple, still gunning for that 292 target. Amazon coming up on the resistance at 240. Looks like we're pushing a little green on Amazon despite the market being a little bit red. And today's just a blip. Like if you're horribly red today so far, you need to reevaluate your life choices. So far, we're just stepping back off the high, just slightly. Google, 337. We're still gunning for that target. Meta, I think that was it. I think this is the pattern. The target is going to be all the way up here. 900, 1100, 1300. Ideally, somewhere in the 11 to 1300 area. Could take a while. Could go fast. Microsoft. Potentially working on a bounce here. We did bounce up. Found resistance at the roadmap line. So this is a key. Can we get above? Go higher? Or are we going to reject off and come down here? That's where we're at right now. Right now, we retested the breakout from last July. That was the high. We broke through it. We came back. We just retested it. Bounced up. Testing some resistance. We get through it. Going new all-time highs. If we don't, probably coming back for a deeper retrace. That's the big picture here on Microsoft. NVDA. We need this to hold if we're going higher immediately. Otherwise, we're going to retest that breakout from a year ago highs. Right back here, these highs we had in November and in January. Probably going to come back and retest those if we don't hold this support right here. Right here. Right now. So that's what to watch on NVIDIA. Right there. Tesla. So far, so good. Still sitting under the resistance. If we can get above this 535 area, 540 area, get above this zone. We set it up to come on up 45, possibly the bigger target at 550. Bigger target for the pullback. We started back here in December, bottomed out here in April. This is a trend, uptrend, a pullback. The continuation would be up here at 550 to 600. Just waiting on that. Time. Netflix consolidating here. Still expect it to drop down, probably retest the 100, maybe a little lower, maybe even down to 90, but maybe pretty extreme. 100 is kind of where I find it. I expected to find some support there. So I'll go pull some gainers. There were a few. I pulled decliners, and there were quite a lot. And then I also bring some setups, stuff that was ripe for a setup potential entry today. Hunt for opportunity in those lists. Stuff that was pulling back that maybe presents an opportunity, like LEU, as long as we can hold on to the roadmap line here. Looking for this to climb back up through that 618 and go for the target 514. Shopify has been really strong. This one, wow. That bounce, if we can get above that 618. 190 would be the target. I do caution that is a measured bounce potential. The measured bounce potential by staying under that 618 leaves open the door to come down here. So if we break down below that low, we're probably coming right down here. I finally figured out what the difference. Several of you asked me what the deal with this and this. Why the divergence in those charts, especially this year. That new video I made, put on the channel this morning, it explains it. Has to do with one of Trump's executive orders. I don't specifically call out NVO, but I do show it on the screen. So it's pretty interesting. I explained it quite in depth. So light, that's probably going to be due a pullback. GE Veranova still hunting for support here. If we can pop back up through the 616 area, 700 will be on the upside. SanDisk, I do expect to pull back. Let's look for some other, let's see, DoorDash. Oof. Getting whacked a little bit. Got a gap down here. So we've got this high, we've got this low. We're looking for to get back above the 240 area. This would be a 3-day bounce if we can do it right now. So this could take even longer to bounce, but I want to see it break above that. If we don't break it above that, we could see further downside, maybe to the weekly chart. The upside 303 at this point, if we can get above that 240. It's not a buy now. See S&PS being one of the most bullish out here today. And I still would expect this to make a lower low. One more flush right below this low so we can turn it and burn it. BLTE. Wow. Parabolic. Watch for that to come back to reality a little bit. ACN. Possibly finding a bottom here. Long term. Started in 2021. A, B, C. Potential for this to be done with this correction finally. You know, sometimes they take a long time. That one took almost 5 years now. So looking at this potential. I want to see it get through the roadmap line, back through these lows right here, these two. If we could do that, now there may still be one more dip in here in store. If we start getting through that right there, that's an indication that we're going to take this on higher. 456 could be the upside on that one. Let's sit here and look for opportunities like this. Stuff I think is going to reverse. Stuff I think possibly made a bottom. AGQ. Wow. If anybody played that, you're coming up on, that's a first resistance at 105. Next one up here at 160, 170. Canadian Solar. Dang, look at that beautiful pattern. This is probably coming on up. Yeah, the target for 4. That happened so fast. Target for 5 is right up here. Around 45, 44, 45. I would be careful after that. Very possible we get a revisit back down here to 20 after hitting that target. Now it could go on up to 55 or even 70. I sold some puts against it. Got those full profits. That was part of the, I don't remember if I did it in this account. I think I did. Let's see. I think it was this account. Yeah, right there. Made 120 bucks. Went light on it too. Got 2 of them, 60 cents a contract. Pretty good return. Right there. 50K challenge coming along pretty nicely for the month. 6,500 bucks. That's still ways to go. You know, I'm only like what 12% of the way to the 50K a month goal. So still got a ways to go. Keep following. We'll get there eventually. And let's see, other things that might be interesting. I'd be careful chasing this again, though. If you could be down here in the low 20s, it's a fair place. But if you're up here in the high 20s, you could get stuck in what could be an A, B, C correction, because we could still come all the way down in the 15 area and maintain this bullishness to come on up here. MSTR, lower low, ouch. Probably gunning for that 150 target down here. Let's see, AVGO. I would kind of expect this to take a bigger swing. We're seeing a little bit more volatility here. Let's check on VIX. And VIX is not indicating we're going higher right now. SVXY. Let's see, I want to see this pop above this downtrend highs. Create an alert on that trend line. I want to see it break above that. CEG, possible to come on down to the roadmap line, find resist or find support here. turn back higher, break through a 618, and then go on higher. That would be what I'm looking for. Something like a low down here or somewhere around 318. And then the next bounce higher would be 428. Reddit sitting here under the resistance. We did do a gap down way back here in September. It's proving to be quite the strong resistance. If and when we can finally get above it here, maybe back up in the 235 area, kick off this upside to about 300 right there. Robinhood, MU, be careful here. This upside potentially played out for the moment. We have a first move down, a retrace. Second move down could put us back down to the roadmap line. We haven't really done a big retrace since back here in August. GSM still looks ripe for further downside. Robinhood, we did hold support here so far. So far, so good. Here's the high, here's the low, but we're still below that 618. So if this is an A, this could be a B, and we could see this turn down pretty violently, make a lower low for a C. Talked about this potential to pull back. This right here was that pullback right there. Same size. We can see this pull back further, back down to this 80, 70, 80 area. And it would be the same size pullback we did back in February to April. Just keep it in mind. Does it have to do it? No, it doesn't have to do it, but have that high, down to low. Get the low on the actual low. Then project it off of this high. So potential to come all the way down to as low as 67. I mean, it could go deeper, but just to match the pullback we already did earlier this year. Carvana, they bought dealerships. I was seeing an article this weekend where they're actually buying out underperforming dealerships. They bought like 5 of the worst performing dealerships in the country, and in just a couple months turned them into the top performing dealerships in the country. That might be bullish. Well, we did kick off the entry here, 435 upside on Carvana. So they've actually got some plans going here that are actually positive. Not just smoke and mirrors. COHR. And be careful for a pullback. STX, be careful for a pullback deeper. AMD. If we can hold on to this low that we made here, should be able to see some more upside. A break back above the 238 area would indicate 282, 294, possibly 300. Leverage, leverage, leverage. Bloom Energy. I missed the roadmap line. Be careful here. The 618 is coming up right in the vicinity. That's major resistance right there at 115. If we stay below that, potential to come down, make a lower low is high. Oklo, and we retrace to the roadmap line. We want to see this hold, turn back higher, break back above the 138 area, 136.78, and 220 could be the upside there. PLTR, we still have this bigger pullback, similar to Robinhood. We did this big correction back here early in the year. We could easily see that come back and haunt us again. We could even just retest this prior high. So be careful chasing that one too much. Could see further downside. Oracle probably got more downside. Although we're retesting that breakout. See that breakout high right there from back here in November last year. Came back tested it. As long as we hold it, come back up through the daily roadmap line. This is probably going to go back to the highs. BRT, I was talking about that in the opening show. Is that enough pullback? And we came up shy of the roadmap line. We did that before. We did that before. Each of those times has gone on. So look at these pullbacks. It's kind of like echo trade stuff right here. That went a little deep. This one right here. Same size move. So this is that pullback and that pullback. They're equal. Congruent. So the results potential. Let's say move up to like 250 on VRT. If you're liking anything I've gone through and said, give me some feedback. I'd love to see the feedback. Just kind of hunting for potentials, things that might work out in the next couple of weeks. Circle. So US Circle cutting some deals. This could be very bullish for Circle coming up in 2026. They're laying the groundwork for some potential explosive stuff in 2026. So we need to, just as chart-wise goes, we need to see this get back up through some levels here. And we did that head and shoulders in here. We did the pullback. We've kind of held the low here, retested the bottom. Do we need one more dip? I don't know. It may need one more flush down here to establish a new low, move up, retrace. So right now we just have a move up. I'm looking for some sort of retrace that holds a higher low. And when we get back above probably this 110 area, it sets the stage for going on higher. So this will probably be a big level to watch right in here. LB, grinding into the resistance. If we can get on through that, nice upside potential. They're a lithium play for the United States. Domestic lithium play, TEM. Right now we have the high, we've got the low. If we can get back through the 87 area, we'd be looking for 111 on the upside. And QCOM still grinding in the Qualcomm just still sitting here. That's failed to break down, failed to break out. Been in this sideways consolidation for almost 2 years now. Eventually we'll go somewhere, but right now, nada. So looking at setups that are ready for today. The rules of engagement here. We're looking for an uptrend. All right, I have tools that find these things. So they may not all look perfect, but this one looks pretty darn nice. Uptrend, pullback, tested the support, resume of trend, close above the 618, sets up a 75% likely move to the 1448. Right there, 36 is the target. Now, average takes 45 candles to do that. On average, from the entry here to the target, 45 candles on average. Standard deviation on that is 35. That's a high standard deviation for an average of 45. Right? And if you add 3 standard deviations to get to the 99th percentile, 99.7, that puts it at 150 candles. Now, that's not calendar days. That's candles, because the candle maker is not open on the weekend, right? We don't make candles on Saturdays and Sundays. So what that is 7 months that this could potentially take to play out on any of these daily setups. Now, other time frames, other you got to keep your time frame in check. This works on all time frames, same number of candles, but the timeline is different. As 150 30-minute candles is way less time than 150 daily candles. Now, statistics on this particular ticker, not great. 3, it's not statistically significant. So this ticker doesn't have any history of meaning anything. Doesn't have that long-term history in there. Now, other stuff like Walmart does have a good long history and just hit the target. If you played it, congratulations. You won. You're at the target. CGGR. Here's the high, here's the low, here's the entry, 46.50. No statistics that mean anything. CMP. If you don't understand the statistics thing, 30 is a statistical population. If you have less than 30 and you're trying to glean statistics out of it, doesn't really mean anything. You can flip a coin a bunch of times, get heads every time. Doesn't mean that you're always going to get heads. 23.56 here. Almost a statistical population. Running less than the average. The average is 75, so that's less than the average. Profit factor, though, is running more than the average. So this one's not bad. Now, that's the big pattern. My algorithm actually picked up a smaller pattern with a smaller upside. The Python algorithm that builds the list. Looking for that smaller target, which would kick off the bigger target up there. DES. Already in it from back here. Kicking off again. 35 target. DON. Got the high, we got the low, kicking off the entry, 53.88 target. That one's pretty, even though we're slightly under this 81, which is above, and 2.2, which is well above the average. This one might be worth a shot. EWD. Here's the high, here's the low, there's the entry, and 49.85 target. FCX, kicking off the entry. That bigger target I've had on the, I've been talking about the bullish potential here. That's a measured bounce. Bigger upside potentials all the way up here at 57, possibly even up here at 80. FTCS. In it from all the way back here. We did this big pullback. Kicked it off right here. Looking for that 96 upside. And we're pushing the limits of the 150 candles. So this is one of those 1%ers that last even longer. Now my Python algorithm found this little bounce, kicking off the entry, 94 target. But you could go for the 96 target on the bigger upside there. But you are in from a higher risk. GFS. I don't like the downtrend, but it did pick up this bounce here. That high, this low, that entry, 37.94. We can hit that and still maintain the downtrend. Goose. In this from back here. Did a secondary bounce. 16 target. HGV. Python algorithm picked up this smaller bounce. I would probably wait for the bigger bounce. Back above this resistance. That is a downtrend of highs that we got cooking. I'd want to see it above that 46 area to target 54 up there. Awesome, Ted. And HMY. Got this high, we got this low, there's the entry, and 23.40 upside. 11, not statistically significant, so these don't matter. 75, 1.2. IYR. It's been just a choppy sideways. This got in it all the way back here. Looking for that to pop up 99. LVHD. Here's the high, here's the low. This one's in it from way back over here. Entry here, 4180. Marvell. Chips, not superheroes. 101.88 target on that entry right there. MTUM. 263 NXE. Last one worked out. Here's this one. High, low, entry, 1026. Now, low price stuff, be careful. Doesn't always work. OGE. It's in it from way back over here. It still hadn't really moved in months and months, so be careful. Picking up this smaller pattern. 4782. QQQE. Equal weighted QQQ. There's the high, there's the low. 106 upside. RSPT. Equal weighted technology. Here's the high, here's the low. Entry 4793. STY. High, low, entry 144. SPMO. High, low, 126. I don't like the downtrend, but high, low, and we didn't quite kick off the bigger bounce there. It grabbed the smaller bounce right there. 870 target. STLA. Reverse these two letters. TSLA. STLA. Funny, they're two car companies with the same 4-letter ticker. And 1184 target. VIS. 306. XLF. Kicked it off back here on the bounce. Went a little bit lower. Didn't stop it out. Coming back up again for a secondary entry. Target 55. 54. 54, 55. XLI. Here's the high. Here's the low. Entry and 158 targets. And that's the list for today. Looking at the bias before we wrap it up here, if we can hold on to this pullback, break back higher, resistance is on up here at 6,900 on ES. SPX itself, we've got to get above that 6,900 area to push it on out. 6,980 would be the upside target if we can break on out. So there you go. That's what I'm watching for. I'll be on Market Masters at 11:30. Links in the description. Have a great day, everybody. See you again tomorrow.